Welcome to week 3 of the Fair Foundation's virtual conference series, Building a Culture of Preparedness. The theme this week is real estate and risk. Our partners are the National Association of Hispanic Real Estate Professionals and the Missouri Realtors. The purpose of this panel is to talk about how we get more people to insure themselves for flood risk. That's been a challenge. It's been a challenge for both private companies and the National Flood Insurance Program. One anecdote that really points it out is that I was sitting in a insurance conference, pontificating about the importance of buying flood insurance, when I realized that I didn't have it. I had bought a new home about 5 months earlier, and it was never mentioned. It was never brought up by my insurance agent or my realtor, and with all the other things that are involved with closing on a house, I certainly didn't think of it. So I have it now, for the record, but we have discussed the prospect that because realtors are the closest people to home buyers and the most likely time that people will think about insuring themselves for flood would be when they're buying a new home, that perhaps by empowering realtors and giving them information and resources, they would help to educate insurance consumers. So we're a very distinguished panel today. It's a mixture of very prominent realtor leaders and the Floodplain administrator for Pinellas, which is kind of one of the ground zeros in Florida, and 3 very distinguished insurance executives. But I'd like to introduce our moderator, Lisa Miller, the hardest working person in Tallahassee, probably in the entire state. She's former deputy insurance commissioner, represents a bunch of companies, both as an advocate and as a consultant. And so you can read her bio, and I hope you do, because it's very impressive. There was stuff on there I didn't know. So without further ado, I give you Lisa Miller, our panel moderator.
Thank you, Jay, and thank you to your organization. For those of you that are not familiar with FAIR, I often say that they are the big convener of every stakeholder, from lawyers to realtors to contractors to regulators, because you keep everybody talking, and that is the hallmark of your organization, and you're doing some incredible things to get people talking. And when people talk, we solve problems. Often I say, I get paid to talk, and I try very diligently to listen and then talk about how we can get to a better place in a lot of arenas. Today with us, we have some great friends of mine, great colleagues, people who have dedicated their lives to the insurance industry and to help policyholders ultimately protect probably their largest asset, which is their home. We have so much of what we hear nowadays is, sea change, sea level rise. I'm here in Jacksonville Beach on some business, and I was walking the beach yesterday, and the waves are just really choppy, and it just seems so different than 20, 25 years ago. So we're going to talk today with several experts in the field that understand risk. They understand the importance of flood insurance coverage. They're in innovative ways of trying to distribute flood insurance. They're measuring flood propensity. They're selling risks that have a flood propensity. So without further ado, I'm going to just probably do this one by one and ask each of our panelists, that you can see here on the screen, to start by giving us a couple of sentences about who they are. And at the conclusion of that, I'll ask them a question or 2 and let them talk a little bit. And then I'll go to the next panelist and let them do the same thing. And so I wanted to start with Jim Albert. Jim is in the, you got John on the screen. Jim Albert is actually with Neptune Flood, and Jim is the chairman and co-founder of that organization. And I just love the name. If nothing else, it's an incredibly forward-thinking organization that is having the conversation about flood. I've often heard them talk about the fact that a 17-year-old can figure out how to use their very progressive ways to sign up for the flood insurance coverage that they're offering. So Jim, tell us about you, how you got started in this business for a couple of minutes, what makes you happy? And then I'll ask you a couple of questions, if you don't mind.
Okay, great. Yeah, thank you, Lisa, for the opportunity to be on this panel. And this is absolutely such a vital topic. So real excited about this. You mentioned the Neptune name. It was a lot of fun when I started the company. One of the funniest memories was trying to come up with the name and figuring out nautical references of Poseidon or Argonaut or Neptune or Triton or all these different ones. And after a trademark search, Neptune won because I thought it was the easiest to spell and the most available name. But thank you for the intro. As background, I'm the chairman and co-founder of Neptune. I founded the company in late 2016, and then we wrote our first policy in early 2018. It took about a year to a year and a half to build out the tech and get the distribution set up and get backing from Lloyd's and different capacity providers. But since then, we've expanded to 43 states. We have nearly 50,000 policies across both residential and commercial flood.
Wonderful. So having said that, you've experienced those insurance agents, if you will, who help sell your products. What do you say to those insurance agents to get them motivated to sell Neptune?
Well, yeah, I think one of the biggest issues in resolving the coverage gap is that no one really ever wants to buy insurance at all, do they? And now homeowners and auto, that's mandatory, so they don't want to buy it, but they do. Whereas in flood, it's mostly non-mandatory. There are only 5 or 5.5 million policies in the country, but there might be 40 or 60 million homes that are actually at significant risk of flooding. So how do we get the agents to sell it? And in non-mandatory zones, it actually is a real challenge. But to me, the question that I literally have written and attached to my computer screen is, how do you get people to buy a product that they don't want, but they truly need? And I think part of the answer is to make it super easy and inexpensive. So for example, the ease of use, the ease of use of Neptune is a 2-minute process. You enter an address, within 2 minutes, you've got your quote, you can bind your policy, it can be in effect immediately, you can e-sign, you can e-pay, all of that stuff. So ease of use coupled with all the information you need to make your decision and the ability to see the premium very quickly brings a pretty high conversion rate. That said, we still have a big coverage gap. So the couple other things that I stress, one is that it's often less than $1 a day. And when you think that the average loss in flood insurance these days is about $50,000, that's a pretty good value equation. $300, $400, $500 for $250,000 in cover for something that might be a $50,000 loss is pretty good. And then the other one is the stat you can see on the FEMA site and a lot of other places that 1 inch of water equates to a $25,000 loss or more in your home. So that kind of makes it very visual for agents and consumers in making their decision.
Very good. And keep encouraging those agents. I know we all do because it is important. Lisa Foster, I'm going to go from selling insurance and getting agents to help us promote it in the marketplace to you. Lisa Foster comes to us from Pinellas County. We often say ground zero, where every single day she's looking at flood propensity. She's talking to consumers. She's talking to county commissioners and county administrators, et cetera, about what is important and how we can keep those in her neck of the woods, which is Central Florida, the Tampa Bay area, from being, quote, underwater. So Lisa, tell us about you for a little bit, and then I've just got a question or two I'll throw at you.
Okay, great. Well, thank you for having me, and thank you for recognizing that connection between flood insurance, real estate professionals, and floodplain management. There seems to be a very big disconnect between the insurance side of the house and the floodplain management side of the house very frequently. So I very much appreciate the opportunity to present on this panel with these folks. So the county has about 126,000 NFIP policies here. Of course, I don't have the private data, so I don't know how many are covered with a private policy. We do have a lot in the X zone that are covered. One of our outreach initiatives is to promote that preferred risk rating that the NFIP offers. And I know that the private side of things has some pretty low prices as well in those zones. We've got a very comprehensive floodplain management program. Like I said, we look at the outreach piece, but we're also doing a lot of O&M to try to prevent flooding from occurring. We have a very proactive capital improvement program and watershed management planning program. And all of those pieces together in combination with flood insurance data, we're able to use in order to decide what kind of mitigation projects are best and would be most valuable. We're also looking at future conditions with sea level rise. If we do a capital project that exceeds $1 million, we're doing a sea level rise analysis on it before we implement it or decide which level of implementation we're going to do with it to ensure that it survives its expected life. We are also looking at the real estate professionals in the county, and we've been working with them since 2015 to educate them about the flood maps. We developed a flood map service, which is an interactive flood map service. It's got everything from elevation certificates to the FEMA maps to our own watershed management planning, floodplains, to sea level rise, to actual gauge data. And it's available to the public. It's a public facing application. And we do trainings for real estate professionals, teach them how to use that. We also, in partnership with Pinellas Realtor Organization, which now oversees Pasco County as well, we developed a real estate brochure with them, and we teach the real estate professionals how to use the map service and complete the brochure. Since we kicked this off, we've actually made an automated system where they just have to click a button and the brochure downloads for them already filled out, which has a lot of information from, you know, substantial improvement information to flood risk to insurance requirements and recommendations.
Wow. So tell me a typical day for you, Lisa, because you're talking to realtors, constituents. You know, what do you do when somebody calls you? And I got a call from a Pinellas County senior 2 weeks ago. She's worried that she's seeing the water rise every time there's a Saturday afternoon flood. What do you say to those people who have lived in their homes for 35, 50 years and they're seeing the water rise? What is it you say to them? Put it up on pilings? We pray? What do we do, Lisa?
So we talk about mitigation strategies, obviously. We look at the age of the house, the condition of the house, and we can make some recommendations. But quite frankly, we're not going to stop the sea level from rising, right? So I'm not going to argue why it's here, but you know, we're seeing it, so we're dealing with it. So, you know, there are some capital projects that we can do that will mitigate for some point into the future to an extent, but we will continue to see these king tide flooding events. And, you know, of course, the FEMA maps and a lot of the mapping that is done doesn't take that sea level rise into account, or the future rainfall conditions or any of that. So you may want to consider those maps to be under predictive, if you will. If you're building a brand new house, for example, that house should last 75 years. Well, the condition on that map that is already 10 years old, at least, is that really the condition you want to build to? But for the existing structures, it's a trickier question, quite frankly. I mean, you can do some rain gardens and some things to capture some of the water, but you know, looking forward, you know, 75 years and 3 more feet of water, it's definitely a challenge.
So then I'll thank you for that, Lisa, and I may come back to you. That moves us over into the realtor world with my good friends, Maria Wells and John Sebree. And John, I'm going to start with you. You ran for many, many years the public policy facing side of the Florida Realtors. I got to work with you side by side. Y'all were on the front lines of passing Florida's flood insurance law, which is the most groundbreaking in the country. We'll start with you. What do you see the differences are? You hear Lisa talking about existing structures and what do we do? You've moved from Florida to the beautiful state of Missouri. What do you see the difference, and what are your realtors telling you? And then we'll hear what Maria talks about, what the Florida realtors are saying today. John Sebree?
Sure. First, it's great to see you, Lisa, and Maria, and all of you. Jay, I haven't been able to spend near enough time with any of you lately, and I'm sort of feeling out of my depth here with all these incredible flood experts, but I'm actually in my 30th year. December will mark my 30-year anniversary working for Realtors. As you know, 13 years for the National Association, where I first started working on flood insurance, and then 11 years with Florida, and now 6 years here. Your question about the biggest difference, I would say, you know, a lot of this has to do with the perception that the public and our realtor members have about flood risk. And, you know, if you asked anyone in the United States about flood risk in Florida, you know, they would get the shoreline thing. They would understand that Florida is surrounded by the Atlantic Ocean and the Gulf of Mexico. So when I got to Missouri, you know, I grew up in Kentucky, not far from here, and I remember other risks. I remember having earthquakes when I was a kid. And there's there are famous stories about how the New Madrid Fault, a major earthquake on the New Madrid Fault here in New Madrid, Missouri, rang church bells in New England. You know, I had visions of things like that. In fact, I was laughing right before you called on me. Luckily, I was on mute because here in the Midwest, we have a monthly tornado siren. Well, it goes off on the first Wednesday of the month. Of course, it was going off right as you were talking. And I thought, oh my gosh, if I have to unmute right when this siren is still going. But storms are a way of life. They're something that people understand. But I would say my learning curve was the real threat that is flood in Missouri. And most of you listening know all about the Mississippi River. You know, Mark Twain stories. You know, he grew up here in Missouri and wrote a lot about the Mississippi River. But if I told you that the longest river in North America runs through Missouri, you would probably think it is the Mississippi River, but the Missouri River is the longest river in North America. So we have the Missouri River, obviously, that runs, you know, over a large chunk of North America, but the Mississippi River is another 487 miles of our state. So we have that going on, and there have been some record floods. So for the consumer, it is fresh in their mind. 2019 was the Great Flood. I think it's something like 14 million people were affected by floods on the Mississippi and the Missouri River just in 2019. But one other thing, and then I'll turn it back to you to ask another question. Since it's very popular in pop culture right now, a lot of people are watching the show Ozark. And Ozark is the Lake of the Ozarks is just south of me here in mid-Missouri. And it's fascinating to learn once I got here that there's more than 1,150 miles of shoreline at Lake of the Ozarks, which is more than the coast of California. So we have flood risk. I know you asked what the consumers are thinking, and I'm happy to talk about that. Unless you want me to take a breath and ask me something else.
No, I think you were polling your Missouri team members there, and then we'll hear from Maria, because she's talking to buyers and sellers in Florida, and I think we need to get some perspective. It's not just all about Florida. So what's going on in Missouri that you're talking to a lot of?
I did a flash survey of our members this week so that it would be fresh for this this session. 85% of our members responded that the buyer has absolutely no interest in flood insurance unless it's required by the lender. That will probably not surprise anyone on this panel or watching us. I asked about what the biggest detriment was. It was 100% cost. And this, it popped in my head, and this may be something we can talk with Maria about as well, but we hear all over the country that inventory is tight. Sales are off the charts right now, but inventory is so tight, there is no inventory. So I would say a buyer might be really scared that if they added yet another contingency, if it wasn't required, and that contingency being flood, that they may lose that property because there are multiple offers. So that's something that just popped in my head that maybe an item we want to review. This was interesting, Lisa. Over 60% of Missouri realtors said that they do not know of a client who has purchased private flood insurance.
Wow.
So I don't think they even know that it's potentially an option. So we have a huge, huge educational opportunity there. And then, you know, because I bleed realtor blue. I'm not a realtor. I work for them, and I say I wake up every morning thinking how I can make their life better. our national association has been a leader on this issue, and they have a statement that to keep rates affordable, the federal government should strengthen pre-disaster risk mitigation options like grants and buyouts of properties to build stronger and relocate to higher ground. I asked in my flash survey what our members thought of that, and nearly 80% said I wholeheartedly support that statement, which is a good start. We need them to understand that we have to be thinking about mitigation.
Well done, John. Thank you for that very upfront and personal and recent presence of your members. Maria, how about you? What are you hearing in Florida? John talking to realtor colleagues. What are you doing in Florida? And then I'm going to hear from John, Dickson, and Sean about, after hearing this from the realtors, what their thoughts are. Go ahead, Maria.
Hi, Lisa. It's so nice to see you and John. We worked together for many years. I sort of feel like the redheaded stepchild because I'm the one out in the field with actually the consumer before them having to sit down and talk to an insurance agent or whatever. So I take a whole different approach, and I really applaud Lisa. I've seen the stuff out of Pinellas. It's great. I've asked our community to reach out. I don't know if they have, because I think it's really important to be able to have that information. So not only am I a broker here in Florida, I'm a broker in Pennsylvania, and every single county in Pennsylvania had a flood event last year.
Wow.
So it's not just like John saying, there's Missouri, there's Pennsylvania, there's Florida. Florida is the one that everyone thinks about because, it's always like, oh, it's $1 million mansions that are taking up all this money. No, we all know in this group that it only covers up to $250,000 for structure and $100,000 for personal property. I live right next to a barrier island. They're not the ones getting NFIP. They're getting private or even self-insuring. So, I think there's so many myths out there, but here's what I see. A couple things. I can either talk on both the seller and the buyer side. So a seller who wants to sell their property, fortunately on our MLS, and I'm sure most of them, wherever we are, you can easily find out what flood zone that property is on. So a very good thing would be is if most realtors would look at what that flood zone is. So when you're talking, especially to a first-time home buyer, for goodness sakes, so you go out to do a listing and you see if it's in an X or, if it's in an AE or whatever, the diligent thing is to ask for an elevation certificate. They may be people that pay cash and aren't required. Obviously, nobody's making them to have insurance. But what I find on most sellers is that even if it's an X and I talk to them about it, oh, we've never had a flood. Well, you know what? It only takes one event to have a flood. So the sellers tend to protect what is said about their property. And then buyers, most of them have never heard about it or don't even understand. And, I was mentioning the other day that we have a newscaster with all the flooding we've just had in the last couple of weeks saying, they're not even in a flood zone, but they are in a flood zone. They're in an X flood zone. 80% of most damage is done either in a non-flood zone or in an X, and these people aren't covered. So I think a very proactive thing, which I was thrilled with Lisa's, the way they're doing it, is that people understand that if they have to rebuild a home, not only are they going to have to take out another mortgage, they're probably just making it on the mortgage that they have and then have to take a second mortgage. So I usually talk to them and say, do you understand that for every inch of water, it's about $27,000 in damage? And, what do you get if you don't have insurance? And when they know it might only be a grant of $2,500 or even let's say it's $4,000. Okay, let's talk about kitchen appliances. If anybody has bought those recently, it doesn't even cover a suite of appliances. And I think you have to bring it down to reality. The unfortunate part that I find are two things: that when buyers are out there and they have found the home, as John stated, we have a really, really tight market. And when you have low inventory, typically those are the homes that are not the most popular to sell. So they usually come with some history or baggage with them, and it could be, you know, it could be the flooding entity. Well, when a buyer's all stressed and they're going to get everything done, and then they go talk to their insurance agent, I have heard this time and time again, and I understand how the question is asked, but the problem is it's not directed back to them, which is, am I required to have flood insurance if I'm in an X? And of course, what's the answer? No, you're not required. That's all that buyer hears. And so I make sure when they go, if I'm working with them, you're going to hear, you're going to ask, and they're going to answer it correctly. However, here's what's going to happen if you don't have it. So I think that it's a real tight thing. You know, we don't have disclosures that people have to really disclose about flooding or whatever, but, you know, I have stories of people that had no idea, and now they're in a catastrophic event and what they do with their home. So I just think, you know, Lisa's on the right track with where they are and educating the realtors. And obviously, John, your Missouri realtors seem to be pretty attuned to it. But, you know, even in my area, you know, and I'm always saying, listen, do you have a Florida driver's license? And they'll say yes. And I go, if you have a license, you're probably in a flood zone. So I just think it's something that, you know, either most don't understand, or they don't really want to approach it because, gee, it could ruin a deal, whether it's a buyer, a seller, a realtor. I'm not putting the blame on any one person, but I think it is the entity of the whole that makes it go. So that's where I'm at.
Thank you, Maria. That's very helpful. And Maria's been the first one to say that our next zone is a flood zone. So I'm going to kick it over to Sean and John Dickson as well. So you've heard these realtors say, I love what Maria's example was, for every inch it's $27,000 in damage. And so I'll kick it to you, Sean. Is that a soundbite that you can use in promoting the sales of flood insurance? Or, and you know, you heard Jim say he makes it in 2 minutes. You can access his coverage. What is Ken doing, Ken Insurance? And give us a little commercial about Ken and what Ken's doing, and your leadership of that organization and what it is you're trying to do to make buying flood insurance cool and sexy.
Yeah, so Kin is an insurance company that I started 4 years ago. We're not like an MGA or broker. We're a full insurance company with our own balance sheet. And we do homeowners insurance primarily. And I've always thought, I'm not from the insurance industry. I come from other areas of financial services before this. And as an outsider, it seems absolutely crazy to me that everybody doesn't get flood insurance, that it's not just covered on the homeowner's policy. You know, it's amazing to me that the mortgage companies don't require it outside of the, you know, FEMA designated zones. So what we've done is our homeowners policy is sold direct to consumer with no insurance agent in the middle. You know, we have licensed agents internally that can help answer questions, but for the most part, the customer just does it online, which is much easier and cheaper because we don't have to pay the agent and there's no middleman. And so our homeowners policies are super easy to buy. We think it's important that everybody have flood insurance. So we have added flood insurance with a checkbox. So, you know, around a quarter of our customers get private flood insurance from us in addition to the homeowner's policy. It's an endorsement, which is really attractive to the user because it's a much streamlined claims experience. There's really only one throat to choke ours when there's damage. We don't need to get into bickering of, is this flood damage or is it hurricane damage? I don't know. And then also there's one deductible. And I think there are a couple of reasons why not enough people buy flood. And one of them is that it's complicated. And the other is that they're smaller policies often. So it's hard to get an insurance agent interested in selling it. So for us, we really just go direct to the consumer and we say, hey, do you want flood coverage? Exactly what you said. You know, most floods don't happen to people who have flood insurance. They actually happen to people who don't have flood insurance. You could get flood insurance. All you have to do is check this box and it's $200 a year or something like that. It's usually very affordable. And so that's a big part of what we're doing. I'm going to try to get that 25% up higher, closer to 50%. You know, I think most people should have flood insurance. It's an attractively priced, it's a good deal. And floods are, you know, catastrophic. I think FEMA has kind of muddied the waters a lot with these flood designations. And a lot of the times customers look at it and they're like, I'm not in the FEMA designated flood zone. I don't need it. And it's like, no, that's not true. And also, by the way, within those flood zones, like for those of us that consume a lot of the more modern flood models, we know that there's a lot of variation within those, right? Like the risk of a home on one side of the flood zone versus the other could be totally different. And I think it's just very confusing that they're grouped together in this way, in the sort of non-granular way for, because that's what FEMA's been doing forever.
Thank you, Sean. And I think your idea of going direct is a novel one. I mean, there's a time and place for insurance agents and sometimes there isn't. And I think you're kind of on a path where I'm 60 years old and I need an agent to hold my hand, but my 26-year-old nephew doesn't. So I think you're appealing to me to that demographic. Which
I'll tell you what, though, our average customer is 55. So,
wow.
it is not just, and I'm 40, I'm like a borderline millennial, but most of our customers are actually, the average age of a homeowner, which is in their 50s.
Great. That's great. All right, John Dickson, tell us about what I've known John Dickson forever. He's just a great American and he loves the insurance process and insurance public policy. We've worked on that together. So I want you to talk about what you're doing in the space, John, and if you have any great memories of Tallahassee, you can share those too now that you're living in the beautiful state of Montana. Is that right?
Got that right, Lisa. And before I start, I will point out, if you think about what Sean just said about his average customer, and you're leading to that, as usual, you're above average. So I think that's I appreciate the opportunity to be here today. And I think AIH, first of all, stepping back, we are a private flood MGA. This is all what we do, is private flood insurance. And this was coming on the backs of the Bigger Waters Reform Act and the Homeowners Flood Insurance Affordability Act. Those congressional measures opened the doors to this industry, paved the way for lender acceptance, and create opportunity for new innovative capital to reach customers in ways that we haven't before. The panel has got it exactly right. Two things that are happening today that make this conversation what it is. One, you walk into any agency of size, everybody's selling home, everybody's talking about automobile coverage. There's one person talking about flood insurance, and that's the person that was out getting coffee when assignments were being handed out. It's seen as an aggravation, as a nuisance product. And I get it. FEMA been around for 50 years. It's an incredible mandate. FEMA's been charged with providing flood insurance to everybody everywhere. And you look at Jim and Sean and what we're doing at AIH, we are not trying to be everything to everybody. We're figuring out where we can deliver the most value, and then we're attacking that relentlessly. FEMA wasn't given that opportunity. And as a result, it's a complicated, cumbersome program that people shy from. People were talking earlier, I get an X zone and I'm said I'm not required. I've actually been in a room where people are high-fiving each other when they find out they're not required to buy the coverage. And that's the other problem, the requirement. It turns out that water does not know to stop at these imaginary lines that we draw on maps. I use Houston constantly as an example. What happened with Hurricane Harvey is tragic. And everybody on the panel, everybody that's participating in today's webinar event, it's on us to make a difference. We should not have situations where 83% of the victims are uninsured. That's just tragic. You think about the small businesses, the dry cleaner, the local grocer, and how their businesses are impacted when communities are just wiped off the map for months, maybe years at a time, maybe never coming back. The ripple effects are tremendous. And so it's an incredible opportunity for our space. Less than 6% of real property improvements in our great country are insured for the peril of flood. And that's what we're talking about is how we bring innovation to bear, how we bring creativity, how we bring new capital, like Sean's doing with his market, to make a difference in our communities. This is what it's all about. This is how we help people. Just a few years ago, we were talking with a very large online real estate program about the idea of talking about flood insurance in a meaningful way with customers that come to shop for property. And we were told, listen, these are already people that are limited finances, tight resources. We don't want to add one more expense to the homeowner when they're thinking about their real estate purchase. And I thought immediately, how short-sighted. You're trying to close a deal today and setting somebody up for exposure tomorrow that they may not be prepared to handle. Now, fast forward, and you look at what Realtor.com is doing today. It's fantastic. And this is where I get super excited about the changes that we're seeing unfold right before us. Today, Realtor.com, not only are they showing a FEMA flood zone, they're also going to First Street Foundation to show a flood score estimation to give somebody an idea of the risk of that property. And I say that's the call to action for the realtor community as a whole. If we can continue to talk about the risk of flooding to these structures, regardless of flood zone, because you're right, Maria, everybody's in a flood zone, we can make a difference and we can help people. It may be a little bit more money you pay today, but the peace of mind, security, the lifestyle preservation that you get in the long term is far outweighs any cost that you bear today.
Thank you for that, John. Jim Albert, I'm going to go back to you. Let's talk about the mandatory flood purchase and the power on this panel, or the realtor leaders of this panel, the realtors, the national realtors have a much larger voice than the insurance industry ever thought about having on Capitol Hill. Jim, what have been your experience in terms of the mandatory flood, purchase that we kind of hear, meaning that all 300 million Americans might have to have it? Do you see, you work in some of the highest levels from a public policy perspective, Jim. What are you hearing about that, even a possibility? How can we push it over the edge, and what it would mean?
Yeah, that's such a political hot potato. I think most of us, or many of us, go to the National Flood Conference every year. And in the most recent conference that was face-to-face, there was a noted politician who said absolutely not, and came out strongly against that. So I think political wins, that's a difficult one. I do think, though, there are a number of things here. I was on an NAIC call just a couple days ago with a number of the commissioners from the Southeast, and Milliman had coordinated this call. And the statistic they had was that 87% of the homes that suffered losses under the NFIP did not have flood insurance. So, or I'm sorry, had lost, not under the NFIP because they didn't have flood insurance, but 87% of the homes that have had losses were uninsured. So there's clearly a huge problem. And even in the mandatory zones, Lisa, where, and we know it's A and V zones, and if you have a federally backed mortgage, then you're required to have flood insurance. But you have people who self-insure, and people who don't have mortgages, and people don't have federally backed mortgages, and occasionally you have banks that don't enforce the renewal. But the number that Milliman quoted was 25% of the homes in those zones have coverage, which means even in the mandatory zones, 75% of the people do not. My personal opinion is that there really needs to be a broader mandate. And I mean, we look at the example of the AE zone on one side of the street and the X zone on the other side of the street. The risk doesn't, to John's point, the risk doesn't drop off a cliff as you walk across the street. There's still significant risk on the boundary zones of the X500s and those close to where the water flows. So I'd absolutely be in support of some kind of broader mandate, but I think that's going to be a real hard political hot potato.
Then I want to flip this back to Lisa Foster. Lisa, you work with local county officials. You have bosses that are county commissioners. You've got, I think, 20 some odd cities within Pinellas County. Knowing that your residents are going to get a discount on their NFIP policies if they do things to strengthen those structures, and knowing that you have uninsured properties, you can tell us the population of Pinellas County, and I think you have 135,000, I think you said, flood policies that are NFIP policies. What is it that you hear from your local officials, those that you deal with, or even the county administrator, about the priority they place on flood? I'm just curious, which it would be a window into the world for those of us that don't deal in your government circles all day long. And what could we do to try to encourage more government interaction about flood, Lisa? Because I know you're constantly making it a priority.
Yeah, our county and municipal leaders are very much in tune with the potential flood risk and the flood insurance issues that are going on. We've got 126,000 policies about. We've got about 450 structures, 450,000 structures, and about 1 million people. And, the NFIP data that we get that 126,000 from, I don't know if that's rental or if that's structure, because they break it into the two pots. So it's hard to say if a quarter of our folks have insurance and 3/4 don't, or if that's, even less because there's a building and a rental policy tied into that 126K. So with the CRS program, the leadership from not only the county but the municipalities, they are very proactive with their floodplain management regulations and ensuring that they have floodplain managers on staff that are able to advise residents about things and make sure that we have proper outreach to educate residents about the risk. I mean, any way you look at it, flood insurance is a resiliency strategy. It's going to make the individual as well as the community bounce back faster after a flood event. So flood insurance is something that we are recommending, but as far as a mandate, I don't see that happening. You know, like Jim said, it's a hot potato. That, I mean, that would be a political nightmare, I think, to try to sell that, quite frankly. I think education is the key. You got to tell your constituents what their risk is. You need to have those products available for them to look up what their risk is and have technical assistance available so they can find out what coverage they might need, you know, and what they want to do. They can make their educated decision for themselves. You know, like many of you have said, several folks decide that they're self-insured, you know, and, you know, maybe they are and maybe they aren't. And then others, they're just afraid of the price, or they have that mentality, that FEMA mentality, I'm in or I'm out, and they're just not getting it. And that means we need to do a better job of educating everybody.
So we have some journalists on this call, and we throw around terms like CRS and mandatory flood purchase and inside the flood hazard area and not. And I do want to, I want to educate them because they're one of our best resources. Whenever we just heard Jim Albert say that in the mandatory special flood hazard area, that's the SFHA for our reporter journalists that are listening, there is a requirement that if FEMA puts you in that little bucket, special flood hazard area, you're supposed to have flood insurance. Yet we're hearing and we're seeing statistics that there are those homeowners in those areas that don't have it. So I'd like to throw that even over to John Sebree, who works with bankers a lot. Maria, you do too. Is there any way to get our bankers, I don't want to say in the enforcement business, but, you know, to help encourage our bankers to encourage the flood insurance purchase? John, do you hear those kind of discussions about those that are, quote, out of compliance, yet they live in a very high risk flood zone and the banks aren't enforcing it? Have you heard that discussion?
I don't. You know, we've always heard that about earthquake insurance, you know, in California, and, you know, that there's sort of one standard for one area and one for another. I would love to do some research on that though, and find out. But one thing I did want to throw in, and it follows what Lisa and others were saying. Well, you were talking about the political hot potato that flood insurance is. And I think many of us who do advocacy work at the local, state, or federal level find that anytime we're trying to raise the bar, whether that's get more people to have the insurance that they should have, or raise the professionalism bar, or, you know, there are places where certain professions don't even have to have a license, like home inspectors in many parts. We're constantly hit with, you're just expanding government. You know, and so flood insurance is the same thing. So my colleagues on the panel here who said it's the political hot potato, you can't get Congress to say this or whatever, that is our opening to, those are the same people that can't argue with expansion of private flood insurance. So maybe we find a way to turn that argument around and start really spreading the word and educating about how private flood insurance is the answer. It's not your question, but it was something I didn't want to.
You know, it's interesting. We talk about private. There's plenty of room for private flood insurance, for surplus lines, admitted, NFIP. There's plenty of buyers. In fact, one of the questions that's just come into us, and I'd love Sean Harper's perspective on this, is that when a life insurance salesman sells life insurance, they talk about the risk of dying. How do we use what sales techniques we can? Maybe we even include in financial advisor curriculum, we've got to get outside of our bubble. So we've got the realtors we know that could help explain it more. We've got insurance executives that can. We rely on insurance agents. Maybe we go outside of our bubbles. And you're creative, Sean. What if we reached across the aisle to our life insurance sales reps and our financial advisors and really push hard to get them to talk about flood insurance? Have you given any thought to that?
Well, I think the reason why life insurance is sold so much is because there's a lot of money in it. You can make like a really big commission. I think that's an issue with flood insurance where it's pretty small ticket item. So we need to figure out a way to make people aware of the risks in an automated fashion. One thing that we do is we actually have, this is coming out soon, there's a site page on Kin that quantifies the flood risk for every state or for every property in the states where we do business. And we can say, hey, here, like realtor, hand this page to your customer and it'll tell them, and they can do the cost benefit on their own really easily. And that's an easy thing to do, right? Like getting people to become an expert in flood insurance, whether they're a realtor or financial advisor or whatever, is a lot, especially because like it is kind of a tricky risk to analyze. Like, I'm sure at Neptune it's the same, but for us, it's like, it is extraordinarily granular. Like we have a separate price of flood insurance, a separate risk assessment of every single address, and you could be different than your neighbor. So we need a way to sort of surface that information. And maybe you're not. Maybe your house is an acceptable risk for a flood. You want to self-insure, but I don't think anybody is really accurately has the information they need to make that assessment right now. And we need to give them the data that allows them to do that. So we're excited about realtors as a means of doing that, right? Like it's a really simple, it's a URL. You can point them to it. Like just show them, hey, do what you want, but here's an accurate assessment of the risk of the flood risk for your home.
Thank you for that, Sean. And Maria, I'm going to send it back to you. I've just gotten a question. You'll love this one. Who of your buyers and the demographic of that buyer who do express an interest in buying flood insurance and who do care about insuring their home for flood? Is that the younger buyer, older buyer from the north, buyer from the south? Because I know we've got all these people coming down from the north moving to Florida. What is the demographic, the region of the state or country that do express an interest? Like when you're in Pennsylvania and you're talking flood insurance, who is it that says they're interested in it, Maria? Or is it
no one? No one. No one wants to pay any more for insurance than they have to. So I think the correct thing is the education. I know that's been mentioned on the panel. The problem is, certainly in Florida, we're never going to have a mandatory disclosure. I don't see, John could probably answer that, but I don't see that ever happening, which is sort of sad because there's nothing where anybody has to sign. Are you aware that this is in a flood zone? And then where would that signature happen? Where would that be? Would it be at time of contract? Would it be the mortgage company, whatever? And the other thing I think that's really concerning, I have not heard brought up on this panel, but let's take a flood high risk, a flood zone, an AE or whatever, and let's say they're grandfathered. And I have yet to see where a mortgage company actually says to them, do you understand that your flood insurance is going to increase like this over X amount of years, which may price them out of staying in that property. So I think this is such a complex situation with flood insurance, and people don't understand it. I'd like to give people more credit than they do, but having done this for so long, I just see no one's interested. But I will tell you, when I sit down with a first-time home buyer, especially, and let's say they're in an X zone, and I go, it's going to cost you maybe $50 a month in that insurance to cover yourself for the year. And they go, well, we can't afford $50 a month. And I said, well, can you afford rebuilding if you have a flood? And I have had, quite a few that have said, you know what, we can't really purchase right now. Now, I want you to think about that. In the industry, is that what is going to really happen? you know, in understanding it and turn away a buyer or whatever, because you've really got to have the knowledge to be able to explain that to someone. And you need the knowledge to explain, if you're buying in a high risk that's grandfathered, what's going to happen each year with that policy to possibly outcost them in the history of the home. So I don't want to make it complicated, but it really is complicated.
Well, Jim, I just remember Jim telling me, and Jim, I'm going to turn it over to you. I think you've done some survey to kind of get a feel for who's doing what, right, Jim? Albert, are you there?
We did a survey this summer, just coincidentally, of a few thousand people across the U.S. and it was about flood risk awareness. And there were a few surprising conclusions, but one of them was related to the question that you just asked a minute ago, Lisa, which was the awareness of risk. And so my assumption was that, well, okay, people who have owned a handful of homes and are in the 50 to 70 demographic or whatever would be the most aware of their risk. It was completely upside down. The most aware of their risk was the youngest demographic in our survey, which I think was 18 to 30 or something like that. And the verbatim comments implied, because maybe it's more awareness of climate risk and more being tuned in to those things, but that was one of the surprising finds, that it was actually millennials were the most aware of their risk and the most likely to have flood insurance.
That's very helpful. You know, the missing piece here, a lot of it, and I've just gotten another question in about the insurance agents. And Sean, you make a good point. When you're an insurance agent, I think the average commission on an NFIP policy is about 20%, somewhere in that range. And on a private flood insurance policy, it might be 12. And I've had conversations with insurance agents. I think all of you have, to encourage agents to, you know, maybe they can make it up in volume, whatever the case may be. But I think we have to bring the agents to the table and have them have the conversation about flood and have them understand that, you know, this 20% is a great commission with the NFIP, but the private market, you know, has a lot more options, the single adjuster. John Dickson, I'm going to turn it over to you because I know you've been very passionate about this, but, you know, you're friends with a lot of agents and you know, you've had the frank conversation about 20 versus 12. What's the reaction to that? You know, what are our agents saying?
It's a real issue. And I mean, the question's valid, right? This is the nature of the industry where we sit today. But as always, the devil's in the details. For the NFIP, for example, it's a complicated program, like I said. There are multiple pieces that contribute to the total out-of-pocket expense of the homeowner. You have the premium, you have a reserve fund assessment, you have an occupancy surcharge, you have a federal policy fee. None of those components of the federal program are commissionable. So what's really happening is in the federal program, you may get 20%, but you're getting 20% of 70% of what the borrower pays, the homeowner pays. Whereas in the private side, it's a lot simpler. We're paying a commission on the premium is the premium, and we don't segment the premium into these different pieces about policy fees and surcharges because, you know, the federal government is not holding us accountable for occupancy, for federal policy fees and things of that nature. The other thing that's important too, especially for, you know, thinking about an agent who's trying to help a homeowner mitigate risk, understand risk, and find solutions to preserve their lifestyle, to keep their family whole in times of disaster. It's not just about the flood. The conversation is broader than that. And so if you have a home, you're competing on the auto, you're competing on the home, you got everything bundled, but your only option is a federal flood program that's going to cost the homeowner $400 or $500, $1,000 more than a private option. Now you're going to get 20% of zero because that person's going to go find a private option. It's going to save them a lot of money because they have a risk that a private option is attracted to.
Good point. 20% of what? 12% of what? Thank you for that, John. We have another question that's come in. I'm going to read it, and then I'm going to think about who might want to tackle it first. For our insurance experts and even our realtors, and Lisa, you're familiar with it too, we have what are called reinsurance costs. And reinsurance is insurance for insurance companies. And the reinsurance world, Bermuda, London, Germany, those reinsurers help bring to market a lot of high risk types of coverages, like flood insurance in many instances. So there's a question on the table that as climate change continues, as the environment and the climate worsens, is what this question is saying. Is that going to rise the cost, make the reinsurance cost rise, which would make the cost of direct flood insurance go up? There are those, and part of this question is there are those that believe that if you spread that risk and that cost, that higher cost because of climate change, you know, we could actually not say reduce, but quell higher flood insurance primary costs. And there are those that believe that it doesn't matter what happens, rising reinsurance costs are going to pass consumers, and consumers will never be able to afford flood insurance. So I'm going to pass that back to Jim and let Jim kind of take it, and then I'll get to Sean and then John, and then I'm going to have the realtors react to that. Go ahead, Jim.
Probably last on my list of the questions I'd want you to throw my way, but I've got a couple points here, Lisa. One is that Milliman came out with a survey last year, and they did it with Cat Risk and a few others, but they evaluated the NFIP rates and what, if they were actuarially sound, what the rates would be across the country. And many states, including Florida, the average homeowner would see a significant decrease. I think the numbers, and I don't have it up in front of me right now, but somewhere in the order of 70% of homes would actually see a decrease if it was actuarially sound. And the NFIP, we all know, and it's been brought up a couple times, how inefficient the pricing model is. It was set up a long time ago and it worked for a long time, but now with single risk modeling like we do and like Sean does, that is almost irrelevant whether you're in A zone or an X zone or wherever. You can model much more discreetly. The biggest issue overall is the point you brought up, Lisa, which is the aggregation. And the NFIP, their problem is not pricing. Their problem is actually aggregation management. If there's a storm in Miami or a storm in Houston or a storm in Virginia Beach or wherever, they're going to take massive losses. The NFIP cannot possibly have a year like this year and not lose 10 or $20 billion. It's going to be a travesty for the NFIP because they have all the policies in a single bucket. So disaggregating that is really the best answer. I don't know that they're, even with higher reinsurance rates, I don't know that would drive higher private flood prices as long as you had efficient disaggregation, a broad market with, right now there are at least 120 private insurers. And so encouraging the distribution of those products across multiple insurers can actually both create competition and also have more efficient pricing.
I'd forgotten about those really good Milliman studies. For those reporters that are listening, you can actually go to Milliman's website. We can help you find them, but it was very powerful to know that Milliman looked at what the policy prices would do, you know, which would go down based on their research. Sean, you're in the reinsurance market. You've got reinsurers that are loving what you're doing and they're trying to give you money, or maybe they are, maybe they're not, you never know. But what are they saying to you, you know, with climate change going crazy and, you know, it's going to make their costs go up? What do you think is going to happen in the next 5 years?
Yeah, I mean, we look at this a lot. I don't think there's any question that flooding is going to increase as average temperatures increase. You know, there's no question in our mind, at least, that that's true. You know, that's one thing that's going to cause rates to go up. But there are other things that we can do to offset that. And one is make sure that we're well diversified. In fact, I would argue that like one of our best tools in making climate change livable is the diversification of risk. Right? That means it's not just one group of people that's getting exposed to it every year, but it's spread out over everybody. So I completely agree with Jim on that. We need more diversification. The reinsurers are the biggest, most diversified balance sheets around. So it makes sense that they would hold the risk. They're going to have a lower cost of risk. You know, we lay off most of our flood risk to reinsurers for that exact reason. Right? It would be unaffordable for us to hold it because our portfolio would be too concentrated. For them, that's not the case. I also think that reducing administration costs is a huge opportunity. Insurance is remarkably inefficient relative to other industries in terms of how much of the premiums go to overhead. You know, in almost every other line of financial services, you've seen very significant deflation over time. The price of trading a share of stock has gone from hundreds of dollars to $0. The average fee to administer a mutual fund has gone very, very close to zero now, with Vanguard, Fidelity, a bunch of these big funds offering zero fee index funds. You know, the price of a cross-border monetary transaction, you know, used to cost $30 to do a cross-border remittance. Now it costs $3. Meanwhile, in property insurance, you've seen the expense ratio of the industry on average stay at around 30 to 35% over decades. And that's staying the same in percentage terms, even as the amount of the policy and dollar basis has been going up. So actually, you've been seeing really significant inflation, not in the risk part, but actually in the administration and overhead part of insurance, at the same time that you've been seeing that go down in every other area of financial services. And so I think there's a huge opportunity to have competition and technology and automation actually drive down the administrative part, which can trade off, some of the increases in the absolute risk that we're seeing because of global warming.
I'm going to close with one more question. Throw this one out there. Maybe get John Dick, maybe even get Lisa Foster to talk about it. We've all heard about Risk Rating 2.0, which is the kind of cool name that NFIP is using to try to make their rates better, or actuarially sound, whatever we want to call it. And you've got politicians that are saying, oh, that's just a mask to raise rates on NFIP policyholders. You've got others that'll say it'll make the rates fair. So Lisa Foster, from your standpoint, though you're not a rating expert, neither am I, what do you think Risk Rating 2.0 does? I mean, you're all about fair and balanced, floodplain, making sure that the risk is what the risk is. What are your thoughts about it? And then I'm going to ask the realtors what they think about it. Lisa?
Sure. So I absolutely agree that we need to have a better way of rating these policies for the actuary rates. And they've said that they're going to keep the glide paths in place so that we don't see another debacle like Biggert Waters. So it will definitely impact a lot of folks negatively, and some very positively, actually. My big issue with it is there's a huge disconnect, again, floodplain management to insurance. So now FEMA will be rating the risk based on these new CAT models and coming up with these more refined risks for each property, yet we will be, as floodplain managers, permitting things to these old outdated firm maps, right? So we're going to be building a structure which could potentially end up with a $10,000 a year flood insurance policy because the risk on the map is completely different than the risk that is the refined risk from the 2.0. So I think before they release this, they really need to align the floodplain management side of the house with the insurance side of the house.
Very well done. That's a panel session on its own, and we'll put some more floodplain planners around it. From a realtor standpoint, who worried that high rates equate to lost sales, what does John Sebree say about balancing NFIP's rates or making them actuarially sound?
It's what's fair and should happen. And I think it would make it a lot easier to sell the consumer on flood insurance if you could make the case that it's a fair rate for fair risk and that kind of thing. Though Maria is much more an expert on this than I am.
Maria?
Okay, I wouldn't call myself an expert. However, I was very involved, Jim keeps mentioning the Milliman reports, and those were actually produced by the National Association of Realtors. The year that I was chairman is when they started, and then we've done a few since. And actually, still remain on a work group there. And so, look, there's going to be a lot of unhappy people, and there's going to be a lot of happy people, because as I forget which one said, water doesn't draw a line of where it's going to go. We all could, I think, agree the FEMA maps are terrible and the accuracy is just not there. I think this was their way, and if I understand correctly, being on that group, a lot of this was sort of based on the Milliman report of the actuarial rates to try to make them more fair, because you can't just have one plot be that and another plot. So, to make it more equal, to hopefully that people get better insurance. I know it was delayed. It was to be released and it was delayed. And now I think it's October of 21. I could be wrong, but I think that's when it is. I've been in some pretty contentious meetings where people are going, my rates are going to really go high. And then on the other side of the room, it's like, well, mine are finally going to be fair. I don't think no matter what we do, it's going to be popular, but I actually think in its in its perception of what I'm seeing, is going to be more fair than what we have right now. And it also might make it easier for realtors or others to really understand, that aren't the experts like you are, that look at all the CAP models and everything, to go, okay, we know this area and this area. It could come with some real negatives too. Whenever there's a positive, there's a negative. So, you know, I'm looking at it that it's not a bad thing, but you know, let's step outside of Florida and Pennsylvania and Missouri. You know, I can tell you the Savannahs, you know, Georgia, Louisiana, this is going to be really tough for them. And, you know, it's just a new way of thinking and how they're going to do it. And it was sort of surprising that we're not going to have legislators approve this. This can be done by FEMA. That's my understanding. So please correct me if anybody has different information.
You know, I think what Jim, Albert, and I've been talking about is that it's a disclosure issue. If you know, when you get your NFIP bill, your flood insurance bill, supposedly risk rating 2.0 is going to show you the glide path, if you will, to your actuarially sound rate. So, you know, there's a lot of unknowns about this. We're coming to the close of our panel session. I was going to give each of you an opportunity to say a couple of sentences of closing remarks, whether that's a commercial about your company or, you know, hello to your grandkids or whatever it is. I'm happy to let you do that. I was going to start with Lisa Foster and have her give us a closing and what her thoughts are and move on from there.
Sure. Again, thank you all for having me on this panel. I think it's really critical that we look at closing this gap on insurance and partnering up. You know, the floodplain management community really needs to partner up with the insurance and the real estate folks. So these relationships and these partnerships are absolutely critical moving forward to ensure resiliency here in Pinellas County and everywhere really. And like Maria said earlier, you know, it's not just all coastline. Granted, Pinellas County has a lot of coastline. It's not all coastline. We have a lot of low-lying areas all over the country that are impacted by rainfall and you know, climate change isn't just sea level rise. It's increasing frequencies of very heavy precipitation, and in these urban flooding events that we're seeing just from very intense rainfall events. So we need to look at it holistically. The CAP models are great for assessing that risk. We still need that data, that historical data, in order to better identify mitigation strategies at the local level. And I think education and outreach is just a huge piece that cannot be overlooked. We've developed a lot of maps, external facing maps, which you can get to from pinellascounty.org/flooding. And I encourage you all to look at those. The real estate disclosure program, I encourage other communities to go out and work with their real estate professionals. We've also partnered up with insurance professionals in the county as well that serve as volunteers to answer questions to our constituents about flood insurance. We call them flood insurance advocates, and serve on our program for public information. So thank you very much for the opportunity to be here, and I look forward to continuing our work together.
Thank you, Lisa. Appreciate that. I'll turn it over to you, John Sebree. Final word.
I would say, obviously, we have a lot of work to do here in Missouri. We have 677 communities that are participating in the National Flood Insurance Program, which is great, but that means we have 195 that are not. I would also say that there's a great area here for partnership, as several of the other panelists have mentioned. We have, you know, I mentioned 34 local boards of realtors here in Missouri that are always looking for a program, a speaker, somebody, an expert to come in and talk. And we can make sure that those local boards have flood insurance as that topic. And we can spread that around the country and try to get more education among the realtors, because I think that would go a long way to getting the consumer educated.
Got it. And Maria, final word?
Yeah, it's been great being on the panel and having like-minded people, really the concern of our communities and the consumers we serve. And I would just be all for anything we can do to move it forward, that we're not lone speakers, that we really can get the communities to embrace. Because, you know, I'm watching this year and I've seen some pretty young families lose everything over the last few months, and they were not aware they were supposedly in a flood zone. And that just breaks my heart. So I think anything that all of us can do to work together to make it better would be wonderful. So thank you.
Thank you, Maria. John Dickson from the beautiful state of Montana.
I'm going to take us off the topic for a second, Lisa. And I think the panel's been fantastic. Love the perspectives. I think I heard a lot of like-minded people here. But my closing thought is this. We're in the midst of some really crazy times. And even so, staying at home, staying safe doesn't mean staying still. Every one of us can do something to help those around us. And that's what we're trying to do at On Edge, is to help as many people as we possibly can. And so that's my challenge for everybody who's taking time to listen to us today. Take action. Do something to help the world around you. You know, a rising tide does lift all boats. So let's help everybody's boat inch up a little bit higher.
Thank you for that inspiration, John. Jim Albert?
Just a couple things, Lisa. One is I really admire the work of the floodplain managers, and at least Foster and her team do, in particular in Pinellas, but I'm also a member of the association, and mitigation and insurance are two sides of the same coin. So having a really strong research and science behind the mitigation work that's done, I think is absolutely critical, and we're all in it together. The other thing is, and I just want to put it out there, that I think we realize from our conversation that there is a massive amount of work to be done to raise awareness about the need for flood insurance. And just as a case in point, the last conference I went to right before the whole world shut down was the leading real estate conference in Las Vegas in March. And we had a booth there, and I was manning the booth, and most of the realtors, and I talked to hundreds of them, most of the realtors that came by were stunned that there was an alternative to the NFIP. So there's still a lot of education and awareness that needs to be done. We launched a direct-to-consumer site a couple of years ago, and most of the shoppers on that site are actually realtors, because they know they can go there and actually see at least one big part of the equation, which is what is the premium going to be for the closing transaction, and they can factor that into the cost of their real estate transaction. So a lot of work to be done, but this is just a great panel and a great topic.
Thank you, Jim. Sean?
Yeah, I would just add, awareness is super important. Also, you know, this is one of the biggest challenges we have facing us as a society, is how to deal with the changing environment. You know, and it's going to require a lot of investment in science, both in terms of how to adapt physically to this risk, and then also in terms of how to understand it. So I don't think any of the catastrophe models right now, they're very good. They are not good enough. And we need to, you know, they're just not predictive enough. But with all the amount of data and computing power out there, you know, we're interested in making better models that help us understand the physical world and you know, respond to it in a more efficient way.
Thank you, Sean. I wish all of our panelists, you know, a bright future. There's just so much to be done in this arena. To me, I often say that property insurance is old news, though a lot of my friends don't like to hear that, and that the future is flood insurance. So I'm recommitted to each of you to help you in any way that I can, whether that's through connecting you through my network or just helping you. I love to write with white papers, or to get a politician's ear that maybe they aren't listening. John Sebree is very good at that, Maria's, and so we'll do what we can. I'll turn this back over to either Beth or Cindy, or is Jay still with us? Which one of you will bring us in for a landing and close us out?
Hi, Lisa. That'll be me. Thank you so much for moderating the panel and everyone for speaking. I think us at the Fair Foundation, we spent a lot of time thinking about how can we encourage more people to buy flood insurance, and we're working on our own program to help educate and empower realtors. So this is such an important topic for us. And I'd also like to add, all of you spoke a lot about mapping and flood risk tools, and I want to encourage everyone, if you haven't had a chance to look at 2 of our panels from last week. One of them was talking about all the new changes on the horizon with flood risk management and some of the new mapping panels. And then we also had a demonstration from Matthew Evie from the First Street Foundation, which John mentioned. As we know, he's really making a lot of changes and moves in this spreading awareness about flood risk. So for everyone watching, all the sessions are recorded, and we really encourage you, if you want to learn more about flood mapping, to go back and look at those. And then today we have another panel starting at 3 p.m. called Water Pollution Impacts on Real Estate Tourism and Risk Management, another really important topic. And that is going to be moderated by Susan Glickman, the Florida Director of the Southern Alliance for Clean Energy. So I'd ask everyone to tune back in. And if you have some time to check out our exhibitor booths and learn a little bit more about the panel sponsors and be entered into a raffle to win a pair of AirPods Pro. So thank you everyone and enjoy your afternoon.
Thank you. Have a great evening.
Bye.
Bye-bye.
Bye.
Great job, Lisa. Thank you so much.
Thanks, Lisa.
Bye-bye.
Thank you.
See you all.